What's going on, everybody? It's Jeff here. Welcome back to the channel. Expect a wild week ahead of us for a couple of different reasons. One being there is some speculative information that the hedge funds are in trouble, and our fight to win the battle is inching even closer for AMC stock. And I also want to talk about what to expect to happen in the market overall, especially with the effects of the ship being stuck in the Suez Canal. So guys, stick around. You're not going to want to miss this. If you're new to the channel, all I ask is that you hit that like button and subscribe to join the family. If you're interested in joining our private community, it's the first link in the description. We have over 300 members. I have my private portfolio over there, and we go over all of our stock picks, and you really get to break down and analyze where the best plays are happening for the week ahead. So if you're interested, guys, first link in the description. We would love to have you over there. Let's get into this video. I really want to talk about this article that I read. It is titled "Wall Street Banks Ditch $19 billion of Stocks in Unprecedented Block Trade Sell-Off." All right, Goldman Sachs and Morgan Stanley have reportedly sold $19 billion worth of shares in Chinese tech and US media companies. Traders are now wondering what caused the unusually massive move and whether it will continue next week. Now, Goldman Sachs alone liquidated $10.5 billion worth of stocks in block trades on Friday, Bloomberg reported, citing the investment bank's emails to clients. The first batch that included $6.6 billion worth of shares of Baidu, Tencent Music, and VipShop Holdings was sold before the market opened on Friday. Later that day, the bank reportedly managed the sale of a $3.9 billion worth of shares in America media conglomerates of Viacom, CBS, and Discovery. And we know all of those stocks to take a huge tanking. But let's dive a little bit deeper into it. Another U.S. investment bank involved in the block trades, which are believed to have wiped out $35 billion off affected firms' valuations in just one day, was Morgan Stanley. Point taken, they have a portfolio manager at Swiss-based Bellevue Asset Management. I have never seen something of this magnitude in my 25-year career. Okay, another individual says this is highly unusual. And another issue is the unclear nature of those trades. Goldman Sachs explained the sales with forced deleveraging. We're going to talk about that further. The outlet also said that the move could indicate that a big hedge fund or family office face some serious problems. Meanwhile, CNBC reported the selling pressure in some U.S. media and Chinese stocks was linked to the forced liquidations of positions held by family investment office Archegos Capital Management. Now, why is this important to us? For a couple of different reasons. One, I want to talk about the fact that what is going on inside the market. This is just another article that explains it a little bit further and a little bit different, but it is multiple different media outlets are reporting this as well. Let's talk about why this happened. Okay, so the Federal Reserve has said that they will not extend a pandemic crisis rule that had allowed banks to relax capital levels. We're going to dive into that further. The decision to relax the capital requirements has been widely viewed as a key to calming what had been a tumultuous treasury markets in the early days of the COVID-19 pandemic. We are going back exactly a year from now. A need for cash had caused a massive sell-off in the bond markets that the Fed helped to cover through its liquidity programs. So basically, they had raised their requirements, and they had relaxed their requirements, and the reason to do so was to protect the treasury market from falling. It said it was set to expire March 31st, which is coming up this week, and investors wanted them to extend it. Right here, Wall Street had been lobbying heavily for an extension of the exemption as banks have been flooded with deposits that require them to hold offsetting capital against customer money. In deciding not to extend the SLR break, the Fed risks a further rise in interest rates as banks might decide to sell some of their Treasury holdings. The Fed officials say the Treasury market has stabilized and Friday's decision should not change that. So that is one issue that might be involving might affect the entire market as a whole. But how does this play out for AMC stock? Well, right now you have banks that have already pulled back on their supplementary leverage ratios, which is what SLR stands for. And the reason what this could be called for is the fact this is the same thing as getting a margin called. Okay, so that is what we are waiting for to happen with AMC stock. Now, do I believe this is going to immediately trigger a squeeze? Absolutely not. Do I believe this is pushing us in the right direction? Absolutely. The other key thing to think about, and this is what I've told you guys multiple times, is that the hedge funds are not just going to fold up and lose, and they will do anything they can to be able to borrow money when a margin call is made. And as you saw in the first article that I had said, Right here, the outlet also said that the move could indicate that a big hedge fund or family office faced some serious problems. Now, when I have personally been trading on margin before and I've gotten a margin call, it's been a small percentage of what is needed. But what I do in the meantime is I transfer money from another bank account, okay? And then I try to continue to play my position. If it gets too bad, which knock on wood, it has never happened to me before, then I would have to take a different route. But that's looks like what is happening as of now is that the hedge funds are going to be able to need to borrow money, which is a great sign because this is not just going to take us from 0 to 100. There's many steps that need to happen in order for this to finally squeeze, and we are moving in the right direction, especially if these hedge funds now need to borrow capital. So great news for us, okay? So pay attention to this, not only for AMC stock, but also the entire market, as it's going to be rocky for a little bit, as well as just the past natural choppiness of being in the second year of a bull market. If you are new to investing, I really want you to go look up exactly what to expect in the years of a bull market. We are officially over the first year of a bull market. I made a video previously talking all about it, what to expect in the second year. And guys, really getting a good understanding of history and what goes on in the markets is going to give you a even better understanding of how to invest in the future, okay? Last thing I want to talk about, which is going to affect every single stock that you own, is the fact that the ship is still stuck. This is a website that must have just been popped up. Is the ship still stuck.com? Yes, it's been stuck for 5 days, 9 hours, and now 41 minutes. It has cost us $52 billion so far. It is costing the trade industry $6 to $10 billion every single day this is stuck. Okay, experts suggest that this might continue to be might continue to be stuck. It could take even days, if not weeks, to be able to get the ship unstuck. However, it is going to affect the market and the global trade for a long period of time, because right now what you have is you have a bunch of ships stuck waiting for, okay, the Ever Given of Evergreen Company to get unstuck. And because they don't want to go all the way around, okay, the tip of Africa, because they know it's going to take a few weeks, it's going to cost more for fuel as well as the risk of piracy, they're choosing to wait. So what you're going to happen is these ports are going to dry up and they're going to be waiting for ships to come in. Then what's going to happen is Ever Given's going to get unstuck, the ships are going to fly through, and then they're still going to have to wait because the ports are going to be full. So it's going to take a lot of time, okay, weeks, to be able to get this thing moving and moving again. And what does this mean for the entire market? Well, it's not just the fact that certain items might go out of stock of stores, and which the threat of revenue and so forth. This causes uncertainty, and bulls in the market never like uncertainty, okay? And there's already been a bit of choppiness with what's going on right now, the threat of inflation, the reopening, what's going on with COVID, these new strands of COVID. This just adds to the fear, all right? And when you have fear in the market, that is when the bears win, okay? So just be tight with all of your positions, maintain tight stop losses, be careful what you invest in, and like I said, most importantly, just getting an understanding of how this is going to affect the market, okay, is going to give you a better understanding of how to invest in the future. So as every time, everything that happens in the market is a learning experience, guys, okay? And so maybe let's say you don't take any actions, you don't buy, you don't sell, maybe you take a little bit of a loss depending on what happens. The good thing that is going to happen from this is that you're going to be able to analyze and look back how something of this magnitude was able to affect the market when you might not have even thought of it. Now, I remember back when in March, early March of last year, and we were seeing China economy start to slow down, and I was like, wait a minute, we are getting out of this, because even though it's not hit the US yet, and COVID, a lot of people at the time thought COVID was just a joke, a little Chinese joke. I knew it was eventually going to come over here and affect the market, and I knew that because one, I've been investing for a long period of time. So even if you're new to investing, use this as a learning opportunity, because chances are, if you're young like me, you have a long time investing in the market. It is one of the best vehicles to build wealth. And I mean actual wealth. I don't mean making money, guys. I mean building wealth for you, your family, and generations to come. So get yourself knowledgeable. And if you're interested in getting even more knowledgeable and joining our private community, first link in the description, guys. That's it for this one. Be careful this week. I'll see you in the next one.